want to talk more about Harley Davidson's first quarter earnings. Joining us now is Harley Davidson's former communications director, Ken Schmidt. And it's interesting that the president is now defending Harley when last year he was on the attack with Harley. Bottom line, Harley's saying it's going to be able to attract 2 million new riders, younger folk, to ride motorcycles over the next couple of years. Can they do that?
Oh, believe it. They're doing a tremendous job already at attracting non-traditional riders, people who, haven't been part of the Harley family. So you're seeing it now. You go into any dealership on a weekend, you're seeing a tremendous diversity of faces and ages in the shop. So yeah, you can definitely see the momentum is swinging in the right direction.
But at the same time, though, the U.S. sales are still not picking up like the company would like to see, and that doesn't seem to have much to do with tariffs or costs. That does seem to do with demand, right?
Oh, that's purely a demand thing, but it's also, at least this time of year, it's a very seasonal thing. I mean, the bike selling market doesn't really kick off until you get the first warm Saturday in every market, and spring is just starting to hit in the northern half of the U.S. So you're going to see some more excitement and more floor traffic certainly in the upcoming months. So hopefully that will be sustainable and speak to that demand issue. And the other side of the demand issue, Julie, is the fact that there are so many used motorcycles in the market right now. And that's Harley's biggest competitor is itself. Right. The number of used motorcycles out there in the Harley camp, grows by, a few 100,000 units every year. So there's literally millions and millions of bikes out there because they never go away. They never end up in junkyards. So there's just a mass market out there for the used bikes, too.
But it's also a global market. I want to bring Constance into this, and not specifically on Harley, but on the trade negotiations that Harley is dependent upon and so many other companies are dependent on with the EU. That has not been front and center in news coverage. What are we seeing? Are companies, not just Harley, but are companies very worried that there could be further delay with some kind of agreement with the EU?
Well, sure. And I think what they're most worried about is if we get an escalation where we see a tariff increase with the EU, right? And then retaliatory tariffs. And that is the big concern. And you're seeing this both from European companies and U.S. companies. And it's at the margin, it's hurting investment, which then hurts GDP growth.
And I guess it's fine if you're a business that's thriving and you can then pass on some of these cost increase to your customers. But Constance, are we seeing that? I mean, how widespread is that ability?
I think it's not really about thriving or not thriving. Of course, the companies that are thriving are better able to absorb this, but it's about long-term business decisions and having uncertainty about what the marketplace is going to look like, what the optimal supply chain should be, because you don't know where the tariffs are coming, when they're coming, if they're coming. And so it's more about long-term investment strategy. And if you have uncertainty, that hampers your ability to make long-term decisions. And so what companies tend to do is put them off until they have more visibility.
Well, and let's just talk about the consumer just for quickly, because when you talk about tariffs between the U.S. and Europe, that largely centers around goods that consumers know about, right? Cars, motorcycles. When we talk about tariffs between the U.S. and China, it's largely on these sort of opaque products like steel and aluminum tariffs.
It's intermediate goods as opposed to final goods.
Right, but I'm saying there's a difference, though, between consumer goods and those intermediate goods. So the consumer is more likely to detect tariffs on cars and motorcycles versus steel and aluminum.
Ken, before I let you go, Constance brought up something about market. And I was curious, is Harley's future North America, Europe, or Asia? I thought the big push was going to be Asia.
Essentially, Harley's looking to build half of its business outside the U.S. So that's going to be predominantly Europe and Asia, with a little fluctuation between countries on a year-to-year basis. But you're definitely going to see a uptick in effort to build the offshore markets.
And I know that you're no longer there, Ken, but I am curious how you think that this tariff back and forth is affecting long-term investment and decision-making, to Constance's point.
Well, I think it scares people because if you take Europe, for example, and you bring a $20,000 motorcycle, say, into Germany that traditionally would have had a 6% tax on that. Well, it's now at 31%. And that's something that can't be passed on to customers, because that would just put the bikes entirely out of their means. And that tariff is scheduled to go up to over 50%, by the end of 2021. So hopefully what President Trump talked about today becomes a reality, and the U.S. moves to get those tariffs reduced, because it's a huge hindrance to sales, and it also kind of puts Harley in a negative light and casts a pall over the business, because it got sort of sucked into this political maelstrom that it really had nothing to do with.